Let's talk about a small cap company with a market cap of nearly 250 crores. Salasar Techno Engineering had a good fourth quarter. Increase in execution of orders aided the revenue growth for the company, which also led to an expansion in margins compared to last year. Let's discuss the quarter gone by and the outlook going ahead with Shashank Agarwal, who's the joint managing director of the company. Hi Shashank, good afternoon to you and thanks a lot for joining us on Bloomberg Quint. For full year, your top line has grown by about 30%. And the bottom line grew by about 14%. Would you be able to maintain this run rate in FY20 or do you expect to do better?
Well, in terms of the top line, probably will be growing at around 15% as the business looks good. It could be even higher sometimes at about 20%. And as far as the margins go, I think margins have improved during last quarter. And we hope that we'll be able to maintain these kind of margins going ahead as well.
So the last quarter, that's the quarter 4 of FY19, the company recorded margins of about 12.4, which is on the higher side if one were to look at the last 4 or 5 quarters. Going ahead for entire FY20, would you look to maintain these margins or it will hover about in some range of between 10 to 12 that one has seen in the last 4 to 5 quarters?
See, we've been maintaining an EBITDA margin of about 11% or so. The last quarter being probably one of the good quarters in the sense that the volume of production was high because of the dispatch pressures from all the sectors. And overall cost of manufacturing was less. And we were able to maintain the economies of scales. The margins, of course, were slightly better. But for the whole year, of course, ideally we would like to maintain that. But it won't be possible to maintain exactly probably at about 12%, maybe around 11.5% we should be able to maintain our EBITDA margin here.
Shashank, what suppressed the bottom line growth is also the high finance cost that the company has seen for the full year. I guess the finance cost was somewhere about 16 crores. What's the debt on the books and is there any repayment schedule in FY20 for that?
No, we don't have any long-term borrowings. These all are working capital debts, which is about 140 crores. And I mean, if you compare us with the peers, probably in terms of percentage, we are a slightly better place than most of our peers in terms of the percentage of the finance costs. Of course, in volume terms, in the absolute numbers, probably the cost of finance was slightly higher compared to last year. But last year should not have been taken as a benchmark because we had the IPO money lying in our account for some time, which we used as working capital. So the finance cost last year was slightly less, and it looks slightly, which has gone upward compared to last year. But going forward, probably in terms of percentage of the finance cost, we should be able to maintain these costs.
Okay, and taking a closer look at your balance sheet for last year ending March 2019, your trade receivables have gone up on year-on-year basis by about 39 to 40%. Tell us what's the cash conversion cycle right now because it appears that it was higher in FY19. Will this continue going ahead or do you plan to bring it down?
So it will come down in FY19. We completed a substantial part of one of our projects in PVNL for distribution, for rural electricity distribution. And there were a lot of payments which were held up, rather I would not say held up, they were slightly delayed, being the government project, because you require a lot of sign-offs and everything. We are targeting to complete, these projects in Q2 next year. This year, in FY19-20, and post-billing of the full project, the payments would start flowing in, and hopefully all the payments which are due, which has actually stressed the working capital cycles, they will probably come down by end of Q2 or so. So the cash flows would definitely improve. If you would look at the numbers of last year versus this year, probably the cash flow was slightly better.
Okay. Just last question, Shashank. What's the order book currently and what's the guidance that you can leave us with regard to order book for FY20?
We have an order book of about more than 450 crores, which includes government projects as well as private telecom companies' orders. And as far as the guidance goes, we have been maintaining an order book of about 250 to 300 crores. And going forward as well, I don't think there'll be any dearth of orders, given that there is a very stable government at the center, and the focus of the government is on the infrastructure sector. And we being at the core of the affairs here, we are present in most of the sectors. So, I mean, we should not have any problem in having a good order book as such.
And any new orders that you've bid for recently?
Yeah, we have bid for some orders in transmission sector in Haryana and in Himachal Pradesh, which are yet to open. But we have close to 250 crores of order which are already finalized in our favor from the government in EPC sector.